Good day everyone, I'm David Paul. Welcome to VectorVest and welcome to my presentation on the most conservative VectorVest trading plan, which we refer to as worry-free investing. I have to put up our disclaimer. We are authorized by the regulator. Although I'm qualified to give financial advice, I can't do so because I haven't sat down with you and done a long and a detailed fact find. I'm allowed to talk about those shares I hold myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on, and my objective is to show you how to invest with confidence and outperform the market in a few minutes a day, and it's quite a stretch in 20 minutes. So let me get going. That's me. I've been investing in the markets of the world since 1982. And I've been helping retail investors improve their performance in South Africa, the UK and the US with VectorVest over the last 10 years. I've got a PhD in mechanical engineering. So what we're going to talk about today, ladies and gentlemen, is the VectorVest system of analyzing shares. A controversial subject, which is market timing. We firmly believe that there's a good time to be in the stock market and an awful time to be in the stock market. And then I'm going to fuse it together into a safe and robust worry-free investing strategy. So let's make a start. The VectorVest system for analyzing stocks. Well, three magic words: earnings, inflation and interest rates. And based on that, the founder of VectorVest, Dr. Bart Dolido, has put together a valuation algorithm for every stock on the London stock market. So we can tell at a glance, or you can certainly search for it, which shares are trading below their VectorVest valuation, which shares are trading above their VectorVest valuation. And clearly we favor shares that are trading below their VectorVest valuation. We believe that everybody should know, what's the stock really worth? How safe is the earnings stream? And then some idea about the trend. Is the share rising? Is it falling? Is it going sideways? A very important number, ladies and gentlemen, is relative value. Now, relative value is an indicator of the long-term price appreciation potential of the share. And if I can get my pen, long-term is defined as 3 years. So the only timing in this is a window of 3 years. So what do? We forecast the earnings of every company on the London stock market next year, the year after that, the year after that. We assume that those earnings will be discounted into the price at some time during that window of 3 years. And we calculate what the price will be. We take the projected price and we subtract the price today to get the upside, and we divide that upside by what a AAA rated corporate bond will pay in the same period. Everything on VectorVest is rated between 0 and 2. Greater than 1 is good, and greater than 1.25 on a scale between 0 and 2, this is a share that should outperform the performance of a bond by 25%. In our worry-free trading plan, we're looking for shares that are safe, but at the same time can grow earnings. And one of the characteristics of our worry-free trading plan is that we're looking for shares that have got a relative value of greater than 1.25. And we'll stick that in to our search in a few minutes. The second VectorVest metric is to do with safety, and relative safety measures the consistency and the predictability of the financial performance. So what the algorithm does is it looks at the balance sheet, the income statement, the cash flow statement, it looks at sales, it looks at margins, it looks at dividends, dividend safety, dividend growth, all of the accounting ratios, sucks them all in and spits out one number which represents the consistency and the predictability of the financial performance. Again, on a scale between 0 and 2. Greater than 1 is fair, and greater than 1.3, that's a company that's making lots of money, folks, and all of the financial ratios are getting better. Now, in our worry-free, hands-off investing technique, we're looking for the UK's safest shares, and relative safety finds those easily. And as a default on worry-free investing, we actually sort all of the shares on the London stock market by relative safety, as you'll see in a moment. Third measure is a measure of the trend, relative timing, and it measures the short-term price trend. On a scale between 0 and 2, above 1, it's rising. Below 1, the share price is falling. And the further above 1, the faster it's rising. And then Bartolito, the founder of VectorVest, put together relative value, relative safety, and relative timing into a single comprehensive indicator. It's called the master indicator on VectorVest. If I was doing a seminar today on momentum investing, then we would sort all of the shares by VST, and that's the standard sort on VectorVest. But we're not talking about that today. We're talking about worry-free investing. As I said a second ago, I'm going to sort all of the shares in the London stock market by relative safety. Bring the safest shares to the top of the pile. We calculate the stop loss for every share in the market every single day. The stop loss is constructed around a 13-week moving average of the closing price of the share, but it's adjusted for the fundamentals. And if the fundamentals are good, and in worry-free investing they're going to be good, then we widen the stop loss. We give the share more room to move. And the VectorVest stop loss is doing its best to find a balance between allowing the share to run so that you don't get stopped out on spikes, and at the same time protecting your capital. That's a very fine line to tread, and there's nothing more miserable, folks, than getting stopped out on a spike, and then invariably after a big spike down, the market in fact moves up the page, not at a trot but at a gallop. And that happened to quite a few people I know. For example, last year on JD Sports, it gapped down before turning and went up 50% in a few days after that. We had grown men in tears. They had their stop losses too tight. If they'd used the VectorVest stop loss, that would not have happened. We put a buy, sell, or hold to every share in the market every single day. Now, at VectorVest, we believe in finding the very, very best stocks for your portfolio that suit your objectives. And today our objectives are to find shares that are going to grow safely. And we want to buy those shares when the general market is rising. And our mantra, ladies and gentlemen, is to buy rising stocks in rising markets. And a subject for another day is how to short awful stocks in falling markets. That's for another day. Buying rising stocks in rising markets. And Bartolito says being on the wrong side of the market is the worst thing that can happen to an investor. It doesn't have to happen to you. I would go a little bit further, and I would say that the most important thing to know is whether the market is rising or falling. Everything follows from that. I believe that in the quest for relatively safe, relatively quick capital appreciation, the 70% of the exercise is what the general market is doing. And we're taught by pretty much everybody that to ignore market direction. That's my metaphor for a stock market. The fairground roller coaster. Now, I haven't been on one of these things for about 40 years, but the last time I was on one of them, they took a very, very long time to get up there, and they fell very quickly. The markets took the whole of 2019, January and February of 2020 to move up, and they gave it all up in a fortnight. In the first 2 weeks of March. I'm sure that's indelibly printed on your mind. So we believe there's a great time to be in the market and an awful time to be in the market. And VectorVest does its best to satisfy the market timing needs of all types of traders. spread bettors who are in the market for a couple of days. We have a market timing system that suits them. Swing traders that want to be in the market for a couple of weeks, 3 weeks at a time, we have a medium-term market timing system that suits them. And for position traders such as we're discussing today, where we want to be in the market for many months, many years, hopefully, we have a long-term market timing system, and they're called confirmed calls. Now, I hope you can see this, but they are printed every day. If you see a green confirmed call on the front page of VectorVest, then that means that the longest term measure of the trend on VectorVest is up. So you do not need to go into charts to work out what's happening, and the busiest people can see what the market is doing on their phone in a few minutes. The traffic light measures the short-term trend of the London stock market, and it measures both the direction and the momentum of the short-term trend. And as you can see at the close, on the day before I'm recording this, on Thursday the 19th of November, so we're looking at the close on Wednesday the 18th of November, we can see that the short-term trend is up, and the short-term trend is up, and the momentum of the short-term trend is up. And the advice, you can probably just say, VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. So folks, for a buy signal from our market timing system, we need a confirmed up, and we need this pointer pushing into the green, and the advice on VectorVest saying it's okay to buy stocks. Now, that's all you need to know about market timing, but if you want to work out, go into the charts, they're all there, and that's the VectorVest Composite of the UK. That's our own index. It's the broadest measure of the London market that I know. All 2,200 shares that are traded on the LSE and AIM. That's an up signal. That's the sell signal in February. And since April the 27th, folks, we are heading up. We had a little bit of turbulence here, but nothing much happened. So how do we build a worry-free trading portfolio? Well, we have a thing called UniSearch, which will allow you to search for any mixture of the VectorVest metrics, some of which I've mentioned, and some of which, lots and lots, I haven't. We believe in buying the very best stocks, safe stocks that are growing earnings strongly. The key is relative safety. We want the relative safety to be well above 1.25 on a scale between 0 and 2. And we want the share to be growing earnings at a relative value of greater than 1.25. We're looking for this sweet spot of shares that are growing safely, and those are difficult to find, and I call it a sweet spot. I have a little search that does it, and you've got the notes to this. You can have a look at this, but it's looking for shares that have a relative value above 1.25, above 50 pence, reasonable volume, and I've excluded AIM for the time being, and I'm sorting them by relative safety. And we use the confirm signals, as I've just spoken about, to get in. Remember, we get in when there's a confirmed up. That confirmed up is that little green triangle just here. That's the confirmed up. We also want the pointer to be in the green in the traffic light to tell us that the momentum of the short-term trend is going the same way. So how it works, folks, when we get a green signal, we run our UniSearch, and we in fact buy 10 of the top RS stocks. Sooner or later there'll be a sell signal. We do nothing in the sell signal, but in the sell signal, the red triangle, you're much more likely to get stopped out. If you do get stopped out, you do not replace, you build a cash position. When you get the next confirmed up, you resort and make sure that you're fully invested. And that's the process. Our objectives are capital appreciation and dividends. If you were to run this in the US, then you can consider covered calls for extra income. Very difficult in the UK. I've tested this over 20 years, and that was the performance over 20 years. In the US, that's a 17% compounded rate of return. Last year, the worry-free produced a 45% increase. But folks, we got stopped out of pretty much everything in February. So we give back 15% of that in February. So between the start of 2019 and March 2020, we probably were up about 30% odd. That was last year, and we only traded twice last year just here. We got stopped out of 2 shares in that sell-off, and we then replaced those when we got the next confirmed up, somewhere about here. So in a confirmed down, you do nothing, you watch your stop losses carefully. You're much more likely to get stopped out. If you do get stopped out, you build a cash position. When you get the next confirmed up, run the sort again and replace. When the market is rising, we're always fully invested. And that's what it's done this year, folks. It's up 29% since April. Market's up 19%. So it has a very healthy track record of making money in the UK's safest shares, those shares that can both record a safe track record and also growing earnings reasonably strongly. So you may be wondering how you can do this for yourself. Well, I put together a successful investing quick start course which is built into VectorVest. It'll show you how to do this, and I run through first of all what I've talked about today and lots more. The 30-second stock analysis system. I've run through all about risk, knowing how to get rid of your bad ones. I've gone through the detail of market timing. Remember, there are market timing systems for jobbers, for swing traders, for long-term position traders. I've put together a cherry-picking checklist to suit your objectives, one of which is worry-free investing, and then a 10-minute plan to put it all together. They've been professionally narrated. You don't have to listen to me bumbling along. In the US, they charge $475 for that. But if you roll up your sleeves and you work with me, I don't care whether you've been in the market 30 years or whether you've never been anywhere near a market at all, this will help. That's what we're going to cover. And folks, it's a nominal 99 pence. That's the VectorVest link, vectorvest.co.uk/MI. Now, on the website it's £5.95, but we've been working with Master Investor for such a long time that we've done a special for the show. So, this includes 30 days access to the VectorVest world, not just the UK, USA, Europe, Canada and Australia. That's the VectorVest world. Now that's worth £49 on its own, and that's a part of the 99 pence offer. That's the offer, folks. It's normally a 30-day trial at £5.95. For Master Investor delegates, we're offering a 30-day trial at 99 pence. If you want to stay with us after that, then it's £49 a month. But you can stop it, I assure you. It's on a month-by-month basis. My promise to you is that if I can't make you money, you can stop it any time. And just remember, we are fully authorized by the FCA, and I assure you, I've been with VectorVest now for 10 years, and in that 10 years in South Africa and in the UK, there hasn't been one quibble about a credit card, so you've nothing to worry about there. We run 8 sessions in the 30 days. I do 4 of them. My colleague Glenn in the US does 4 of them, and those are in fact all a part of the 99 pence offer. You'll be given an 0800 number where you can phone our call center, and the call center is open 12 hours a day from 12 o'clock midday to 12 o'clock at night. We're going to take care of you in the 30 days, folks. We want you to be a customer for life. If you don't think it's the best 99 pence you've ever spent, then give me a call and you can have it back. So our mission is to provide the best stock market guidance available anywhere at any price. There's my email address. Any problems at all, david.paul@vectorvest.com. And that's the number of the call center. That gets you through to our call center free of charge in North Carolina. Folks, this has been a bit of a rush. It's been a great pleasure and honor to speak to you. Thanks very much.